Hello traders, this is Dave with the Compass Options Live Trading Room, and this is a weekly Periscope video for 2/20 of 2023 for February. And I will do a little bit of cover of January as well. So let's move ahead with this and get started. Again, I have to do a disclaimer. All the signals and trading opportunities we provide here, orally written electronically, are for educational and demonstration purposes only. Trading is very risky, as we've seen, and you should never trade with more money than you can afford to lose. Neither myself or Right Line Trading are licensed financial advisors, so we won't be giving financial advice. Okay, let's move ahead here. And again, just a recap of January. January was a good month. We had these are some of the trades, just so you'll have to look at here. Nice STZ here. This was a nice 55% gain on debit spread. We had a loss in ENPH here, but some pretty nice wins in here, 40% lottery in Amazon. And you can see generally between 10 and 40% wins on each one of them. Tesla 24, KHC 22, ENPH 22. So in 15, 18, 22, market's been tough to trade. You have to take what you can get. And again, here's the rest of the January trades. Nice 21% Costco. Took Rivian. Well, that was a time spread. We took a loss on that. And had some winning in trade and SPY. PPG. Paro was a really nice one, almost 50%. AXP, we get hit on that one. But Twilio, nice gain. Moderna, nice gain. TGTX, nice gain. AMD, nice gain. CBNA, 41%. So this January was a nice month. We did 42 wins and 5 losses, 89% win rate, which is good. I mean, that's normal, but that's pretty good. February, on the other hand, has gotten off to a rough start. The market has been very, very difficult. We haven't taken anywhere near as many trades in February, with good reason. It's just a really tough trading environment. Lots of reversals, lots of gaps, stocks that look like they're going to move and head up and turn around, and had stocks heading down, turn around, head back up again. So very tough trading environment. Looks like a lot of the institutions are not staying in trades long. They're fighting each other. We don't have a lot of confirmation that institutions are in trades for any length of time. So they're basically sitting back waiting, and a lot of them are some are buying, some are selling. They're fighting each other. So we don't have a lot of convergence with the institutions. But just to recap, and I didn't put all the trades down here, but I did put all the losses down. We've taken 7 losses, which is a lot of losses to take for me in a month. It's very, very, very high, very unusual, and we haven't done an awful lot of trades. But we had a bunch of reverse on us. Moderna reversed on us hard. Target as well. UNH reversed really hard. And so, so you can get trapped in these things. One of the trades was a trade that we get caught on news. That was Moderna. We couldn't do much about that. It was they had a failed FDA test on a vaccine, drove the stock down, and we set up to go long. And there's nothing you can do when a news event comes out. And those can work both ways. I mean, you can get a news event that'll go in your favor and you get a nice gap up. But we tend to remember the other ones worse. But the winning trades, we're doing fine. Uber 37, Disney 36, Net 31, Com 28, Net 28 here. So decent wins. We've got a few more trades on still. We've got Amgen short. We've got Roku long. Both of those have a chance to be profitable for us. We still have another Target trade on that we rolled. We'll see where that goes. And Lyft long as well, which we've got out for a couple of weeks. And again, we had to cut way back on the number of trades that we do. A lot of days it's just a matter of just watching the market chop around. Not too much we can do about that. But I want to be transparent about the trading, and February has been a tough month. This is the hardest month I've had, or the most losses I've had in probably a year and a half. So you get them from time to time, but again, it's nothing we won't recover from. And again, I left in here. These are all the January trades that I put out in a spreadsheet type form that I keep, just so you could have that. And it shows basically the stocks here with how much you would have profited if you put $2,000 into each trade. And it was, I don't think I showed it here. It was about $10,000 of a profit in January if you put 2,000 into each trade. And again, here's the SPY chart for the daily. This is showing where we are as of Friday. You can see the not much movement in here. If we look where the SPY is right here, right now, we can go back all the way back here to January, 1st of January, and we're basically right where we started. We haven't done anything, and these gaps are what makes trading so difficult in this particular environment right now. We've had this for a long time. We had a little follow through here in December and January to the downside that it can be traded. Then we had a lot of compression in here, very difficult to trade in here. Then January we had a nice move up, and we did well in January. And we had a fairly continuous move up until we get into February, and now we've had just all of this chop, and this is really difficult to trade. So I'm not making excuses, just it's very difficult to trade, and I just want everybody aware that that's why you need to keep looking for the high probability trades. You need to keep your risk in check. This is a market that you want to be taking small risks in. Don't want to be taking a lot of trades. As you can see, we've cut way down on the number of trades this month from January. But again, so for folks that are new, this is some charts that I want to go over just to outline what the Compass system tells us and how we find trades and how we trade off of them. This is a Tesla trade we took. The Compass system shows us institutional buying and selling by the colors here. We have a current time frame Laguerre right here, which is the momentum indicator for the in this case the 5-minute chart. And then we have a multi-time frame Laguerre, a multi-time frame momentum, and this would be for the 5, the 15, and the 45. All those would have to be going in the same direction to have a green color or a blue color. And anytime it's blue or green, you have bullish. Anytime you have red or yellow, it's bearish. And this tells you that the institutions are in there buying, and you have convergence with the institutions. And this was the quant line telling us that all the stocks that trade with Tesla are also going up. So it was a nice trade. It comes along here, right along this 15 EMA, which is this green line right here. And these pink arrows are what's called pop out of the box signals. They tell us when a stock is breaking out of compression, as it was right here. And it starts to move to the upside, and this is where you would get in it, right here on this, either this candle or this candle. And these are Fibonacci candles. So as long as the candles continue to show flat bottoms like this on Fibonacci candles, you've got a beautiful trend. So this is what we follow up here. And this was a nice trade. The big green dots in the middle of these candlesticks are called acceleration dots. They tell you that your Laguerre down here, the current time frame Laguerre, is pegged at 100, which is as high as it can go, telling you that as much as we can measure, the institutions are in here almost to the max buying Tesla. So that's what that means. Now this was a SPY short. Again, these are Fibonacci candles on the SPY. This is a little different setup I have on the Compass system. Basically, it shows me the Fibonacci candles. It shows me the Bollinger Band width, the width between the Bollinger Bands. And when a stock breaks out of compression, the width expands. So you're looking for a bandwidth expansion, and that's what this histogram tells you. You're going along here flat, and then it starts to expand as the stock breaks down. So you've got bandwidth expansion, you've got Fibonacci reversal candles here, a bearish reversal, where you go from a wick and a tail to a flat top. That's a bearish reversal in Fibonacci. And down it comes, and this is where you would get out. It flattens out. You see how small the candles get here? They're losing momentum. The bandwidths are starting to drop. And you see here that we will short here when the Compass system, this is the Compass current time frame Laguerre, or the momentum indicator, went from green to yellow, telling us that this is bearish. The institutions are selling. They're selling even more as it goes to red. And so you take your profits down here and it went back to blue, telling you there's some buying coming in. So that's how you use the Compass system to determine when to get in and when to get out of a trade. One of the ways. There's obviously other things we look at. Now this is another SPY trade. Again, one of the things we have here is this is a 5-minute chart. This pink line is called the VWAP, the volume weighted average price. It's basically the level that most institutions will buy and sell. You typically don't want to be shorting a stock until it gets below the VWAP, and you don't want to be trading a stock long until it's above the VWAP. In this case, we have the current time frame liquidity, or the momentum for the current 5 minute, went from blue to yellow, telling us that the institutions are starting to sell. You get a pop out of the box signal right here. This blue arrow is a pop out of the box signal to the downside, coming out of this compression zone. And you've noticed the flat tops. You ride this SPY down. As the candles start to get smaller and smaller, you get out right here as it goes flat. See how it goes flat? Everything was still red, but eventually turned to blue. But this is where you would want to take your profits. The momentum is waning when you start to get these little small body candles like that. This is a trade we took QSR. This is a daily chart in QSR. You can see the compass system on the daily chart here. See this breakout right here. You see everything was blue and green. This is where your break took place. This is a dynamic compression zone breakout, this shaded area. As it broke out to the upside, we saw it and decided to take a day trade on it. So this is what we were looking at on the daily chart. I want you to see that the daily chart can give you basically the bias on the stock on a daily basis on your daily chart. And you really do, if you're trading a stock long during the day, you want it to have the daily chart also be bullish. You don't want to be trading a stock long during the day if it has a bearish daily chart, because you don't have any ability to stay in that trade very long. You can't take it overnight if you need to. So this was QSR. This was QSR on the 5 minute. This is the trade we took that day on that big candle we saw. See how it's coming across here, and it's riding right along this 15 EMA, which is this green line right here. We're starting to get pop out of the box signals right here. We went blue here, and we could buy it right here. This is a pivot point, so that's a little bit of a concern, because they can be resistance. But as it goes blue here, you could buy it. We went to yellow just for one candle, and then we headed up, and we basically took off. And this is telling you that at this point in time that we're gonna be bullish here. Everything goes to green. You're green across the board. Perfect time to buy it is right here on this break out of the box signal right here, and you buy it and you just ride it up. And it was a nice one. And again, here you see the candles start to get small bodies, and they flatten out as you want to take profits. And you can see here, then it went back to yellow on the 5 minute time frame. As far as the momentum is concerned, you want to be out of the trade. Compass system very, very good at indicating these kind of things. One thing you can look for when you look at your compass systems during the day, if you're on the 5 minute chart, look for on the current momentum, look for red to green or red to blue. It tells you that the oscillator is moving up. The selling is going away, the buying is coming in. It's not a bad place to actually take a trade when that happens. You might have had to wait a little bit on this one, but it does tell you that the oscillator is moving from the 20 up toward the 80, which tells you that there's buying coming in. Now, sometimes you want to wait till it goes green, but if you want to get in ahead of the trade, you take a little bit more risk when you do that, because if it could go back again against you, you have to get out. But if you wait until it gets all the way up into the green, to it's all the way up through 80, sometimes you'll miss a nice part of the move. In this case, you didn't really miss much, but you could on some of those. So it's something that I do during the day sometimes. Now, again, this is QSR on the dominator system at the same time. So again, we were looking at the dominator, we were looking at the compass system here for QSR. And I want you to see what we were seeing here. Obviously a bullish setup. Now we look at QSR on the dominator system. This is a dominator system that uses the Ninja 8 platform. This dark green background here is the multi-time frame trend. When you get a dark green background, that tells you that the multi-time frame trend on this particular stock is bullish. It's a bullish setup. It looks good to the upside. You notice you're starting to get some moves here. Now we don't have any buy signals out of the dominator system till right here. But if the dominator system is not giving you any sell signals here, in other words, it's mixed, then you can take this like off of this 15. You can take a long right here and join into this trend. Or if you're more conservative, you can wait until you get the buy signal, which is happening because we've got so much green now on the dominator. We've got a lot of buying coming in across all of the ETFs. Again, the dominator system is looking at market internals, which is looking at the number of stocks moving up on up volume and upticks versus the number of stocks moving down on down volume and down ticks across 5 different indexes. which is basically all of the US stocks, the SPY, the Qs, the Dow, the Russell 2000, the New York Stock Exchange. And when there's a propensity of stocks moving up on up volume and upticks versus stocks moving down on down volume and down tick, in other words, the stocks moving up outnumber the stocks moving down by a lot, like 500 to 100, 600 to 50, then you start to get these signals and then you can buy it. So with the QSR, we had a nice setup here. It also confirmed over here. You've got a beautiful, beautiful setup for a long. Okay, this was a SPY short that I took. This was a short, a very quick trade. Again, you see how we get sell signals. This is the background on the SPY right here. Notice that the background on the SPY is pink, light pink and dark pink. That's bearish. And you got a sell signal right here on the SPY. Well, actually, the sell signal is on anything that's got a short setup, because these are the market internals telling you that there's a sell signal. These signals on like this, when you get a sell signal, are going to show up in any stock that has got a pink background. When the market internals are red and when they've gone bearish, then you got to look at any stocks that are set up as bearish, and if they have a pink background, in other words, their multi-time frame trend is to the downside, then they become candidates to go short. But in this particular case, I'm looking at the SPY. We could get in right here on a short. You could have get in right here, and then it pulls down, and then you would get out right here. You see how the signal went away? You get out of the trade. You're getting too many. See how tiny these candles get? Just taking a quick 4-candle drop to the downside, that with SPY can be pretty lucrative. This is the NPH. This was a nice one that we had short. This is a daily chart of the NPH. You can see it coming out of dynamic compression. This shaded area up here, that's a dynamic compression break. And you can see that it's coming down on the daily chart. You notice everything here is either yellow or red, except for the bias. And as soon as everything goes red or yellow, this is where you would take it. And this was a stock this was a trade you could take overnight. You could get in here, and we actually did take it overnight. And you're not going to stay in it through this most likely. If you come down that much, you're going to take profits. It did continue down, but if you'd have to hold through basically a compression here, and then it moved back down again. You actually could have got in again right here. Here's Tesla, nice little short in Tesla here. Again, you can see that the compass system is telling us that this is a short. See all the yellow and red. See the break out of the box signal right here. In other words, we're getting compression. We get a break out of the box to the downside. This is the 15 EMA, this red line. So this would be considered a resistance area, and you want to sell at resistance. This is where you want to sell. You want to get in as the stock hits that 15 and starts to head down. You would get short right there and write it down. Everything stays red. It kind of compresses, and if you've got profits, you could have taken profits, or you could have just stayed in. There was no reason to get out based on the compass indicators, as they're all red down here. It moves sideways, and then you get another pop out of the box, and another move to the downside, and another move to the downside. Again, you don't want to overstay your welcome in these trades, but again, it was just coming down off the 15. KHC, this was a nice one. We took this right here on an overnight trade, coming out of pop out of the box signal. Everything is green. We get a bullish setup coming on dynamic compression. We held it here, didn't do anything the next day. We were basically sitting on the trade. I think we were down a little bit, pretty flat when we got to this candle right here. And then the next morning it gapped up and gave us a beautiful, nice little profit in that one. Again, everything was green, and we took profits overnight on KHC. STZ, this was one we had during the day. This is the one that we got a 44% return on a debit spread, a put debit spread. This is a daily chart setup, so you can see that you're getting a big breakdown in this candle on that day. You see how everything went from blue to red. Everything is red here. We took this and we took it overnight, and we get a nice debit spread profit on that one. UNH, which is one we took a big loss on in February. We had a nice gain in January. Again, we had a nice breakdown here. This is the daily chart. So this is showing you the overnight, and you can see everything right in this candle here. Everything went yellow or red right across the board. Went from blue to yellow. This is where you want to be entering, because the sellers are now coming in. This thing is going on the gear, or the momentum is coming down from 80. It's below 80 and heading toward 20. The selling has come on. It's telling you that all the institutions are in here selling right now, and they were. Dollar General was another one that we had. A nice little short. This was short for a long time. Notice as soon as it went from blue to yellow right here, this was a place you could have got in and just wrote it down. But there was plenty of opportunity to get into this trade all the way along the way. Every time you get up near the 15, you could get in. You could get in here. You could get in here. You could get in here. Gave you a huge many opportunities to get into this trade. This is a 5-minute chart. You can just write it down. Notice it's below the VWAP. The VWAP is the pink line. Notice as soon as it come off the VWAP, this would have been a beautiful place to get in. As the current time frame of the gear went yellow, in other words, it went from bullish to bearish on a pop out of the box signal. You've got a pop out of the box signal coming out of compression, breaking below the VWAP. Everything tells you the selling is going on. Perfect entry place right there. All right, so that's enough of the charts. I want to just kind of go over again the highest probability trade setups. We pound on this every day in the room, and anytime I do a video, we cover this. But a couple of things, we want the dominator signal background color to align if possible. Now the dominator is market internals. Market internals don't always give you bullish or bearish setups in every day. Some days you don't get any because it's a lot of chop and you have to focus on your compass system. But if the dominator does giving you a sell signal or a buy signal and the background color of the stock you're looking at matches, so if you have a dominator signal to buy and you have a background color that's green, that's a really powerful setup, especially if the compass system also has corresponding green momentum for the current time frame and the multi-time frame. We want to be trying to take these trades. Basically, I call it breakout of dynamic compression, but this is basically to buy at support and sell at resistance. So if you're going long, you want to be breaking out of a dynamic compression, or you want to be coming off of a VWAP. You want to bounce off a VWAP to the upside. You want to be coming off the 15 EMA. You want to be buying at support, some sort of support level. When the stock bounces off that support level, that's where you want to get in. You want to be selling at resistance. You want to be buying puts when the stock gets to resistance, turns around and starts to head back down again. And I should mention right here that you want the daily chart and the current 5-minute chart to be biased in the same direction. So if you're going long on an intraday trade, you want the daily chart to be bullish as well. If you're going short, you want the daily chart to be bearish. You want those two charts to align. It's really important because it's going to give you the flexibility to stay in the trade during the day if it goes against you and hold it overnight if you need to. Obviously, we look for Heiken-Ashi reversal candles that I talked a little bit about. We're looking for a breakout in the same direction as the stock's current trend. Basically, this means we're not going to do any counter trend trading. If a stock is bullish on the day and it's an uptrend and it pulls back and then starts to bounce, then we're going to go in and join the trend. If it goes up high and starts to reverse and come back down again, we are not going to go short a stock that's bullish on the day. That's called the counter trend trading. You're trying to pick tops, you're trying to pick bottoms, and it doesn't work. You catch some winners, you're going to catch some losers. It's a losing strategy over a long period of time. And again, we want to be trading in the same direction of the market trend if there is one. If we've got a bullish trending day in the market, we want to look at longs. A bearish trading day, we want to look at shorts. And again, the modified Laguerre for the current time frame needs to match the direction. So you want blue or green for bullish, red or yellow for bearish. You want both the current time frame and the multi-time frame Laguerre, or the two momentum indicators. You want them both to be aligned. And Bollinger Bands expanding, is something that a lot of times I don't have it on my main chart. I look for that. Typically, if you're breaking out of a compression, you're getting above a bandwidth expanding. And again, one of the things we want to look for is stocks that have relative strength or relative weakness to the SPY. Basically, you just want to look at the SPY candles, see what the SPY is doing, pick stocks. If you're going long, pick stocks that are stronger than the SPY. If you're going short, pick stocks that are weaker than the SPY. You want stocks that have relative strength or relative weakness to the market, to the SPY. They're going to give you much, much better breathing room. If the market turns around, if you're going long and the market turns around, SPY's been bullish and all of a sudden it starts to wane, momentum wanes and it starts to head down. If you have stocks that have relative strength to the SPY, they've been outperforming the SPY, they're going to do much better than the stocks that are just trading with the SPY or worse than the SPY. So it's going to give you an ability to get out of the trade with a small profit or a small loss, but you're not going to take a much bigger loss than you would if you had a stock that didn't have relative strength. And again, we talked about this if it's a swing trade. Even if it's a day trade, you want the intraday chart to line up with the daily chart. You want a bullish daily chart with a bullish 5-minute chart and vice versa. And again, pop out of the box signals add convictions to the trade for sure. And the biggest thing is have patience. Waiting for a compression break is going to reduce your risk substantially, or waiting for a bounce off the VWAP, or waiting for a bounce off the 15. In other words, don't chase stocks. Don't chase, wait for them to come to you and then take the trade. You'll have a much better percentage rate using those, and you'll have much smaller losses. Again, this is something I cover, the compass dominated combo. Again, on the dominated system, which is the market internals, if you've got a bullish background or a green background and you've got a buy signal, that's bullish, that's very strong. If the compass system lines up with it at the same time, so you've got green current time frame momentum and multi-time frame momentum, you've got a really strong setup. And a bearish, just exactly the opposite. Background would be red on the dominator with sell signals. If you get those all lined up with the compass system and the dominator system, it is possible to take larger size, but I would only recommend this if you got a trending market day. If the market's choppy, I would keep your size small all the time and stay in trades longer only if you've got a trending market. On choppy days, you've got to take profits quickly. It's just, this market has been brutal. It has not been trending at all for the most part. You've got to take profits when you can get them. And a lot of times they're small profits. People say, why do we get out so soon? Because the stocks have been reversing very quickly. Stocks with relative strength have not been able to maintain them all day. Institutions are going through what's called sector rotation. That used to take a month to go through a sector rotation. They would get into energy and out of techs, or into techs and out of energy. They'd spread that out over several weeks, or at least a few weeks. Now they're doing it from one day to the next. So very difficult to stay in trades a long time. And again, the best levels for entries when the dominator aligns is a bounce off the 15 EMA of the EMA, the green line we talked about, bounce off the VWAP. The pivot point comes in. We have these white pivot points, which we talk about during the day, and break out a dynamic compression. That's where you want to be going long or going short. And I do want to reiterate what our goals here are in the room. We want to help the members become consistently profitable traders under all market conditions. This is the key thing. Market conditions have been brutal. You need to become very proficient at looking for high probability trade setups, looking for technicals, and becoming proficient in all market conditions. Right now, the market is very, very difficult. If you can learn to trade well in these conditions, you'll do much, much better when the market turns around. We want to teach members the most effective use of the compass and dominated systems. Again, we're looking, the things that are driving the market these days, we talk about this all the time, is the institutions and algos. And the only way you can make money as a retail trader in this market is to be trading with the institutions and the algos. You got to be trading in the same direction as they are. So typically, the only way you can find that is by using the compass system and the dominated system, which is the dominated system tells you what the market bias is, and the compass system tells you if the institutions are in buying or selling that's trade. If they're not in there buying or selling that stock that you're looking at, you don't want to be in it. If the compass system is not telling you that they're in there, you don't want to be trading, because you're just trading with other retail traders at that point, and that's a losing strategy. Also, we're trying to educate members in identifying and trading the highest probability trade setups while being patient. This is really important. You've got to be patient and wait for these things come to you, because the trading is tough, and we're trading against other retail traders, and you have to have the best tools, which we have with the compass system and the dominator system. And you've got to have better tools than the other retail traders do, which we do. So you're going to war with the heavy weapons. You're in there with tanks, and you're trading against retail traders who've got slingshots, and you're gonna take their money. Retail, you can't take money from the big boys. You're not going to beat the institutions. You're not going to beat the algos. Don't think like that. You're not going to be able to do it. You've got to find out when institutions are in there and join them, and when they're not in there, get the heck out. Don't be trying to trade against other retail traders. And we're trying to accomplish these goals in a relatively low stress and disciplined environment. And I think that, you know, if you're hyper scalping or you're scalping or you've got too much money in a trade, you're going to have a lot of stress. You're going to be trading with emotion. And when you start trading with emotion, trading your P&L, you're not going to be consistently profitable. It's just too difficult to trade when you're trading under pressure like that. You don't make good decisions. So that's what we want to be. We want to be disciplined, and we want to have a relatively low stress environment, which is why I try to keep the room with fairly low stress, not freaking people in and out all the time. We got to give these trades time. And you know, when the market's bad, sometimes they go against you, but that's part of trading. Just to cover recap, we've talked about this 2022 trading environment. We had a year-long bear market. That's the worst since the 2008 financial crisis. It was extremely difficult trading environment, and it still is the worst in many, many years. Many retail traders were not able to adjust the trading strategies and mindset and blew up their accounts or simply gave up. And I know lots and lots of people that fall into that category. Swing trading was particularly difficult because of the many gaps at the open and violent bear market rallies. And we're still going through that kind of a situation now with individual stocks, so it makes it particularly tough. This isn't going to last forever. We're going to get into a trending market at some point. And then you look back at this and realize that you're learning in basically under fire in a really, really difficult market, and you're going to think that you died and went to heaven when you start trading in trending markets. If you survive the 2022 trading environment, you are well positioned to be consistently profitable trader. This is really important. This was a tough year. A lot of people gave up, but we persevere. We take the highest probability trade setups, and we just keep on taking a strategy that we know is 85 to 92% win strategy, and stay with it. And then again, this was just a performance recap. You've seen all this before. 340 total trades, 298 wins, 86%. This was from January till end of December. 45 losses, 298 wins. Profit factor 2.16, which is very, very good. Then I compared the Compass Room to when we get Dominator system, we get that in October. So I looked at the results from October, November, and December, and the live room using the Compass only. This is stocks that did not have the Dominator system lined up. In other words, the Dominator system was neutral at the time we took the trade. And we had 151 total trades, 135 wins, 14 losses, two scratches, and profit factor 3.57. That was an 89.4% win rate using the Compass system. Taking trades just off the Compass system, which is pretty darn good. But at those trades did not have the Dominator system aligned, which means there was no market internals in our favor at the time, but they weren't against us, they were just neutral. Then when we switched to using the Compass and Dominator systems in combination, so anytime we took a trade here, the Compass system was lined up and the Dominator system was lined up in the same direction. We did 123 trades, so you see we did fewer trades. We had 119 wins, 3 losses, 96.7% win rate, which is astronomical. The profit factor 12.41, which is astronomical. So if we can get a situation where we've got the Compass system and the Dominator system aligned, these are the really highest probability trades. It doesn't happen all the time. You have to be very patient to find setups that occur like this. But this was pretty good. The SPY Super System, which I was beta testing, I didn't really call these out in the room, but basically the SPY Super System is when the Dominator system is lined up, let's say bullish, with a buy signal bullish, and the SPY is lined up bullish on the Compass system, and it's coming off of a support level, like a dynamic compression break or a VWAP or a 15 EMA. In other words, right at the resistance level, right at the support level, we get long. We would take the SPY long if the Compass system and Dominator system both lined up. That's called the SPY Super System. I did 100 trades, 86 wins, 86%, 10 losses, 10% of course. But the profit factor was higher than the profit factor with a 96% win rate, which shows you that we were able to take larger wins and take smaller losses on the SPY super system. And it doesn't happen all the time. You know, you have to wait for these kind of setups. The rest I won't go through. This is quick credit spreads. I've got a video on that. I got a video on the debit spreads as a profitable day trade. There's a video in the training videos on that. Same thing with Heiken National Candles. And here's a video library, which if you can't get to this, you can just give Rory a call and he'll send you a link to it if this one doesn't work. Again, here's what stocks I'm watching for Tuesday. This is Monday night, and bullish Altria, BBIO. I like this BBIO. I'm just looking for it to break above an algo line. ATI, BWA, and 5 nice setups if the market's bullish. Bearish CHK. This is an energy stock. Mastercard, EAT, which is a restaurant stock, and Divine Energy. We get 2 energy stocks in here bearish. And the key to these things is, when you're looking at those, look for long entries to break over Friday's high with a high probability trade setup. Look for shorts to break below Friday's low with a high probability trade setup, and try to take trades that are trading with the market trend if there is a market trend in the morning. I don't know whether we're going to gap down, gap up. I don't know what we're going to do tomorrow. We're down a little bit tonight before the market, but so this is the setups we want to look for. Again, these are the trades that'll be on this video for you, obviously. I appreciate your time. Listen to it. That's it for this week. Again, we'll try to get back on track. We've got a few trades we still got open in February, and we'll see if we can't run up a string of wins. But I don't take trades just to take trades. Again, our objective here is not to make trades. Our objective is to take profits or make money. So we don't take trades just to take trades. We only take the highest probability trade setups. You're going to have setbacks from time to time, as we have, but you're still trading with a strategy that's going to be a 90% win rate. So obviously you're going to have some really good streaks to the upside as well. And that's what we're looking for. So again, have a great weekend, a long weekend. We've got a 4-day week coming up this week. I'm sure the Fed will be out there speaking. We've got some more earnings coming up. We'll be looking for some time spreads. And I wish everybody a great President's Day weekend. And we'll see everybody Tuesday morning. Thank you very much.